Business organizations come in various forms, each with its own set of advantages, disadvantages, legal implications, and tax considerations. Here are the primary forms of business organization. Sole proprietorship. This is the simplest form, where a single individual owns and operates the business. Advantages. Easy and inexpensive to establish. Owner has complete control over decision-making. Tax advantages. Business income is taxed as personal income. Disadvantages. Unlimited personal liability. The owner is personally responsible for all debts and obligations of the business. Limited access to capital and resources compared to larger forms of business. Partnership involves two or more individuals or entities sharing ownership and management responsibilities. Types. General partnership. Each partner shares equally in the profits and losses and has unlimited liability for the debts and obligations of the business. Limited partnership consists of both general partners who have unlimited liability and limited partners whose liability is limited to their investment in the partnership. Advantages. Shared management and decision-making. Additional resources and capital from multiple partners. Disadvantages. Unlimited liability for general partners in a general partnership. Potential for disagreements and conflicts among partners. Corporation, a legal entity separate from its owners, shareholders, that can enter contracts, incur debts, and pay taxes. Types. C corporation, subject to corporate taxation, where profits are taxed at the corporate level, and again at the individual level, when distributed as dividends. S corporation, avoids double taxation by passing corporate income, losses, deductions, and credits through to shareholders for federal tax purposes. Advantages. Limited liability. Shareholders are typically not personally liable for the debts and obligations of the corporation. Access to capital through the sale of stock. Disadvantages. More complex and expensive to establish and maintain compared to other forms. Greater regulatory requirements and compliance obligations. Cooperative, owned and operated by its members for their mutual benefit. Each member typically has one vote, regardless of the amount of capital they contribute. Profits are distributed among members based on their participation or patronage. Advantages. Shared decision-making among members. Social and economic benefits for members. Disadvantages. Limited access to external capital. Potential for conflicts among members regarding decision-making and profit distribution. Choosing the most appropriate form of business organization depends on factors such as the nature of the business, the number of owners involved, liability considerations, tax implications, and long-term goals. It's essential for entrepreneurs to carefully evaluate these factors and seek professional advice when making such decisions.